Hey everybody, today is day 2 of your free training. So in today's video, you're going to learn about what we call the signature pattern. What you'll realize in trading is banks trade in patterns. And if you can identify those patterns, then you can perfect entry and exit models for maximum profit. All right, so sit back, enjoy day 2 of your free training on the signature pattern.
All right, welcome to this video. The purpose of this video is just to give you some value, just to teach you some things. I'm going to be sending you a few of these value videos just to help get you some information and get you familiar with some of the stuff that we're doing and, and how you can plug in and learn this stuff too. So this first pattern I'm going to show you is something that was taught to me by our incredible educators, our trading educators, and I'll at the end of the video we'll talk about that. And this is a pattern that you're going to see a lot, and this is a pattern that you'll see on any time frame. Doesn't matter from the 1 minute up to the monthly on any asset. So forex, indices, metal, crypto, stocks, doesn't matter. These patterns are all over the place. All right, and this pattern I like to call it a signature pattern. Some people call it a flip. There's all kinds of different names for it, but let me draw it out for you, okay? So what happens is this price is really doing three things, right? It's either trending up, trending down, or going sideways. And what price likes to do, because, the markets are completely manipulated, right? They're completely manipulated by the institutions, the banks, right? The big players out there, right? They move the market in any way that they want. And so, and the reason why they do that is because they can't trade like you and I, right? They just can't hit a button and get in and out of the trade, right? Like if I'm going to buy pound USD, they're matching me up with someone selling it, and when I win, I take their money. When they win, they take my money, right? But with the institutions, they're trading in millions, hundreds of millions, sometimes billions of dollars, and there's no one stupid enough to take the other side of that. So they have to manufacture their money, and this is how they do it. You'll notice on the charts, and I'm going to show you some examples after this, so make sure you stay for the whole video. All right, so what they're going to do is they're going to just start sending price sideways. All right, we call this consolidation, right, where price is just kind of bouncing up in between a range. The reason why they do this is because they're trying to suck in the average trader who's there drawing their resistance levels, they're drawing their support levels, right? And every person's different. They're analyzing the market, and they've got their opinion on what direction this is eventually going to go. Okay, and there's people that might think this market's going to go up, and if so, they're going to start seeing things, right? They're going to start seeing these W patterns. That is a bullish pattern, and they're going to say, man, when this gets here, I am going to sell. I'm going to buy, right? And they'll put a buy limit there, and they'll put their stop loss maybe over here on the other side, thinking that this is a support. And if you ask them why, they'll say, well, it's obvious, man. Look at this. You try to get through so many times, right? This is an obvious support. Now, people that decide this pair is going to go down, they're going to see things like this M pattern, double top, right? And say, man, when this gets back up here, I'm selling. And they got their sell limits there, their stop loss here, and they'll make the same argument as the other folks. Look how strong this is, right? Now, there's people that play the breakouts too, right? So people that think it's going to go up, they might put their buy stop here and their stop loss under here. People that think it's going to break out down, put their sell stop here, their stop loss in here, right? So what's happening is, as all these opinions are forming, all this money is piling up on each side of this pattern, right? And the banks have access, the institutions, all those guys, they have access to the order books. They can see what's happening. And once there's enough people in play, they go ahead and make their move. And this is the move that they do. All right, let's say they want to take this pair up. All right, what they'll do first is they'll jam price down, right? Wiping out the stop losses down here, triggering in the sell stop people. All right, once they've done that, they reverse it right back up, stopping out all the sell stop people, triggering in the buy stop people, wiping out all the sellers, right? Basically creating like a bloodbath. Now here's where you want to start to get a little bit excited, because right here, this candle, and this candle, you're going to hear all kinds of different names for this. I like to call it a banker candle. Some people call it an order block. Some people call it a liquidity candle. Some call it an institutional candle. Doesn't matter what you call it. The only thing that matters is this process repeats over and over again throughout the markets. I call it a banker candle. I just think it's a simple, easy name to remember, right? And what it is, it's the last candle before a move. So in this case, it's the last down candle before an up move. All right. And then I'll show you the reverse of this in a moment. Now, the reason why this candle is important, okay, is because, to create this candle, they had to put in a bunch of sell orders to wipe all these folks out. So when price turns and goes this way, they're now in drawdown on those orders. They need to get back to that candle to do what we call is mitigate their orders, get out of their orders, right? So what we do when we see this, we come here and and it depends how you trade, right? You have to follow your trading plan. Some people just put an alarm here so they know when price gets here, and then they can, use some type of entry model to, what they're looking for is for price to come down, triggers their alarm, and they look for some type of an entry model to go long, okay? Some people just go ahead straight up, put their buy limit there and put their stop loss here, right? Some people do that, right? It's up to you how you want to enter, okay? But what's going to happen is a lot of the times, right? It's not 100%. They don't do this every single time, but they do it a lot. They'll come back and mitigate that candle, and they'll just take off, right? And you, again, want to use, there's so many different ways to enter a trade, right? Based on your risk management, based on how you like to enter trades, right? Do you like to do pendings? Do you like to do market executions? Do you like to go down to a lower time frame and look for patterns on a lower time frame? There's all kinds of things, right? But whatever you use, you've got a good area to work off of, right? And that's the area that you want, all right? And this is called the signature pattern. Now I'm going to reverse this, invert it, and I'll even, let me change the color of this candle. Let's see, I'm going to make this black, so I don't have to change that ever. And then let's just make this green, right? So it's just the opposite if they want to take it down, right? They'll do the consolidation, right? And then all of a sudden they'll break up, wipe everybody out, break down, wipe everybody out. And then again, that's where you can now, once price is down here and it's wiped everybody out, now you can go ahead and set your alarm here, right? And be aware of when it gets back there so you can decide how you want to sell this, right? How you want to do it. And then boom. And then as far as targets, what you do is just want to target, if it's selling, you want to target equal lows, and if it's going up, buying, you want to target equal highs. And the reason is because the same reason I talked about here, equal highs, so retail traders are double tops, M patterns, and they're going to be putting their sellers up there, and the bank's going to come up there and grab it, right? If they're selling, they look at them as double bottoms or W's, and they're going to be buying those. So bank's going to go after that, right? So let's say, for example, price. Where am I here? Let's say when it came down here, price did something like this first, and then went up here, right? This would be a target because retail traders would be like, oh, look, it bounced off of there. It was a W. I'm going to put a buy order there, and their stop loss under here. Right, and they'll just come down and clean that out, right? So that's a really good tip on where to do profit. So that's it. That is what we call the signature trade or a flip. Either way, it doesn't matter what name you call this thing. It's very, very powerful. So now I'm going to pause the video for 1 second, and I'm going to pull up some examples. Hold on. All right, I get some examples of a signature pattern here. My next video I'm going to send you, we're going to talk about the box pattern. But let's just look at these right here. So you can see this one is just basically like I drew it up to you, right? They took price sideways, right? They jammed down, wiped everybody out, jammed up, wiped everybody out. They come right back to that candle, right? Right back to that banker candle, we call it, the last down candle before the up move, and then they take off, right? How cool would it be to know, set an alarm there, when price gets there, to know that that'd be a great place to execute whatever entry model that you have. All right, here's another one. Going sideways, jams up, wipes them up, jams down, wipes them out, comes right back up to where? That last up candle before the down move, the banker candle, the order block, the liquidity block, whatever you want to call it. Right? Boom, and there it goes. And again, imagine being able to identify this pattern and set an alarm there. Right? Gives you that little bit of an edge. Sideways, up, wipe them out, down, wipe them out, come back up to where? That banker candle, that's the up candle before the down move, right? And you can see price reacts from there. Going sideways, jam up, jam down, come back where? Right to that banker candle, right? So you just need to recognize these patterns. And don't take my word for it. Go back and go through the charts and find these patterns. They're there. They're everywhere. And it might take you a little while to train your eyes to see them, right? But eventually you'll be able to see them. And you can see right here, price reacts off that area. All right? They're not 100%. Nothing is. Going sideways, jam up, jam down, come back up to where? That candle right there. All right? Price reacts beautifully off of it. Going sideways, jam down, wipe them out, jam up, wipe them down, out, come back to where? There's that candle again. Last down candle for the up move. And they're off and running. All right, I think that's it. So, all right, that is it. I hope you enjoyed the value here. And go ahead and backtest this stuff. Go through the charts, go look for these patterns, and I think you're going to be pleasantly surprised at what you see. Keep an eye out for my next video. It's going to be a pattern that's even easier than this to see. Like, it's the pattern that people like the most, and it's way easier to backtest as well. So that's going to be in my next video. Keep an eye out for it. And again, I hope you enjoyed the value. Talk to you soon.
Okay, that's it. All right. Hopefully you guys learned a lot from our team leader who's been doing these videos for some free training for folks. And again, if you are ready and you don't need to see any more videos, like I want to delve right into this, then just reach me. Okay, just reach me. We'll start plugging you in. We have a Discord community. We have a team training website. We have Q&As on Tuesday, Wednesday, Thursday. We have a Millionaire Mindset on Mondays. We have a weekly recap on Fridays. We have so many additional resources to help you on your journey, okay? If you're not ready, all good. We'll see you tomorrow as my team leader discussed as to our next video. And have a great day, everybody, okay?